all, John deRoulet, Head of Revenue Management Education here at Wheelhouse. And today we're going to be looking at some data in Sevierville and Gatlinburg. We're getting ready to do our data deep dive call where we're going to pull up a bunch of data. We're going to have a conversation with other revenue managers and PMs. So if you'd like to join us, please send us a message. We'll get you on the list. It'll be a really great call. In the meantime, hopefully some of these insights will be helpful to you. So first thing I just want to pull up is a quick overview of kind of the monthly occupancies year over year. We can see that we're coming out of kind of the low season in winter is well over. Spring is generally like reasonably strong, but definitely not as strong as the summer and the fall. Looking into how 2025 has been performing this year, kind of a similar trend we've seen in other markets. January looked pretty good. February a little weaker, although most other markets were good. But then we're starting to see a little drop off as we get into March. So it'll be really curious to see how we're looking as we get into June and July. We do have some early booking on the books, but the question is that really enough? Diving into the kind of daily level of that data, you can kind of see some interesting trends here. You know, we're coming out of the end of March and it's a little bit high, a little bit closer to last year, although not that close. And there's a pretty big drop off. Now, last year, this would have been Easter, so that makes sense. But that drop off is a bit of a concern. It does kind of indicate that there's going to be a pretty big difference between that end of March period and April. And we're not yet seeing a big increase for Easter this year. So that's something to kind of watch. Last year, we had a really big, strong Easter. This year, we're really not seeing that. And honestly, we're within 30 days. So we're kind of running out of time. Looking forward, we're starting to see some occupancy build up for June, but it's really looking pretty similar to May, which to me is a little bit of a concern given that time period is not generally quite as strong as the summer. And then we really haven't started our July booking too strongly. There's a little bit on the books, but I do have some concerns here about the pace, something that I'm sure you guys might be feeling, especially as you're listening to other revenue managers and other PMs, both in your area and outside of it. It does look like things are looking a little tougher this year than people would have anticipated. So how does this line up to rates? You can see here in the short term, let me zoom a little bit. We're seeing a little bit of attrition over the course of the end of the month, and that kind of makes sense. We're in the short term, but you can see this flip where last year the rates were higher. We're already losing some ground. We definitely have a big drop over Easter time period, which that makes sense. Now, this is pretty interesting to me where we saw that big drop off in occupancy. You also see a reversal where the rates this year tend to be much higher. So kind of an indicator that people are still pushing the rate a little too high. They're maybe not responding to the fact that the consumer is weaker. And we're really only getting those adjustments over the next couple of weeks. A savvy revenue manager might look at this and see quite a bit of opportunity. That trend kind of continues further out as well. It looks like, outside of the next 2 weeks where we've flipped and we're going under last year, most people are still keeping a pretty hefty premium over last year. And, depending on how things are pacing, if that pace is really starting to show is falling behind, or you're worried because of the performance in March, again, a savvy revenue manager is going to see an opportunity here because you can cut the rate, but not necessarily have to cut too much because all you have to do is really get below the market itself, or at least cut to try to find where the consumer is willing to purchase. Last piece of data I've got for you guys is kind of a sneak peek into some of the back-end data we have on booking windows, which I find to be pretty interesting. So what I have here is this is all the bookings in the entire kind of like Sevierville area in Wheelhouse, and I have them for June and July 2024. So this is reservations that are staying in the summer, because what I want to do is I want to check the pace of our reservation development this year compared to last year. So if I look, let's kind of find where we are this year. So let's pick March 25th. That's today, right? Or we'll do March 20th. So at March 20th last year, we had about 121,000 bookings on the books for this entire market area. So not bad. It does look like we're in last year, we would have been in a pretty steady kind of increase from about the beginning of the year before it really turns up around May, where that pace really seems to increase a lot. But as of March 25th, we were at about 129,000 bookings. And then if we go back to March 20th, 121,000. So let's see where we are this year. So pulling up this year, we can kind of see, that from kind of January forward, it was actually quite a bit steeper, but then we have this little hiccup where the pace really changes and kind of tilts down. However, if we go all the way up to the 320, we're about 124,000 bookings. So we're actually pacing pretty good here. That looks pretty good, at least the market is on pace from a gross number of bookings perspective, because right now we're at 124,000. In 2024 at this time, we were about 121,000. So pretty close to there. Now, what that doesn't consider is whether or not we've seen some increases in inventory. It does look like we have. So even though the gross number of bookings is pacing kind of in line, you can see that this 13% increase in properties year over year does indicate that that might feel a little slower to people. That's probably where we're seeing a little bit of attrition in February and March. But overall, that pace isn't falling super far behind. And I think just taking a quick look at those rates again, there's an opportunity for really savvy revenue managers to kind of get ahead of the rest of the market, not be stuck in that 10% kind of gap between the demand growth and the property growth, and really just try to get some extra occupancy on the books, because that opportunity does look there, but the market itself doesn't seem to be trailing too hard. Awesome. Well, I hope you guys found that really helpful. If you want to dig into more of this data with me on our call, let us know. We're going to host an hour-long call. We're going to chat with each other about what's going on, what we're seeing. We're going to look into some more specific submarkets and areas here, and I'll pull up a bunch of data and have it at my fingertips. We'd love to have you here. And otherwise, have a great day. Bye.